What's good, YouTube? It's your boy Marcelino, and we're back with another video. I hope everybody has had a wonderful week. So now we're on to the second video of the week, and the second video is simply just looking at the charts, and hopefully you guys can learn something from my thought process, from just how we actually looked at the markets this week, and not just this week but every other week. So I'm going to try to break down exactly what I saw in the marketplace at that specific point. I'm going to take a look at everything as to why I entered the position. I'm not just going to show you guys the before and the after. I'm not just going to simply do that. What I'm going to do is I'm going to show you guys what the market looked like before I actually entered the trade, my thought process before the trades, and then also my management and why I managed according to the way I manage. And then in terms of me taking losses, I'm also gonna talk you guys through what I learned through the losses, how I could have been a bit better. And with the wins, what you guys will see is that I have taken a bit of profit a bit early, and in hindsight, most of my winners actually ran. That shit ran and was kind of fucked up in a sense, where when I look back at the market at how much pips it moved after I took profit. But guess what? It's perfectly fine to just take profit, guys. It's never a problem to take profit in the markets. So banking profit, changing your balance for the week, looking at the balance and seeing that you actually were up, that's a great thing. But also what you want to do is you want to capitalize on every move that happens in, or not every move, but the moves that you are in. You want to kind of maximize the moves, and that's what we are working on, guys. So without further ado, let's jump into the charts.
So guys, let's get into it. Let's get into the charts. So this was my first trade on Tuesday morning. So as you guys can see, it's around about 8:53. It's simple buys above a area. So let me actually break it down onto the charts and show you guys what I was thinking from the jump. So when I got to the charts Tuesday morning, I came to the daily. Now my view on the weekly was that there's a potential to push bullish after we had this big ass week to the downside, and you can see price pulled up all the way to the upside. Now I do know that we are in a weak rejection area, but however, based off from what happened on Monday, let me show you guys. Based off from what happened on Monday in this candle here, I had my view being that there is a possibility of us pushing bullish. Now bear in mind, when I came to the charts on Tuesday morning, this daily candle, Tuesday's daily candle, had already taken out the previous day's high, so that added more confluence to my bullish bias. Okay, so now I'm coming down to the 4H and I'm looking at, what do I see? What I see is a clear range right here. You can clearly see this is a range, right? Clearly see this is a range. However, what you can see, that price broke out of the range right there, and price held outside the range with that doji candle. Now a lot of people's gonna look at this doji candle and think it's just a doji candle, the markets are not moving. When I see a previous 4H doji candle, what I see is that the previous session did not necessarily move that much. Okay, so the previous session had very little movement. Asia had very little movement, and I knew that coming from Asia, we were in this weak rejection zone. So there is a possibility of price pushing to the downside. However, me having a higher time frame bias from the daily and the weekly being bullish, I'm not necessarily looking for sells. I'm looking for everything to completely go against the sell bias, and I'm looking more so for buy bias. I'm gonna need extra confluence to go for sells. Okay, so I'm looking more so for buys. So what happened was, I go down to the 1H, and what this lines are is my trading times. Okay guys, so I'm going down to the 1H and I'm starting to draw my areas in the market. Now I had this area right here, breakout area, and what you guys can see is that when I got to the market, price was starting to push to the downside, right? Price started to push to the downside, breaking this mini key level at the bottom here. Now I anticipated with my higher time frame bias that this was a fake out, and if this was a fake out, we were then going to break to the upside and then continue going bullish. Okay, so what do? in this case, you can see there's multiple wick rejections at the top. I dropped down to the 30-minute and I start refining my key level, in which I'm looking for a breakout. I delete that zone right there and I start refining my level right here. So that's my breakout level up there. And then what I will do is, because you can see there's more wick rejections, I'm gonna refine it and look for more detail on the 15-minute. Okay, so what I'm looking at is I'm looking at that zone, and you can see it's depicted on this picture right there on the 15-minute. I'm looking at that zone, and what I'm simply looking for is that now, with all of the confluences from the higher time frame and with the fake out happening on the lower time frame, I know based on my studies on GJ that once price breaks above these areas here, bearing in mind that this candles, there's no real consolidation to the left hand side, there's no real resistance or key level to the left hand side besides this right here. So I can target these areas without a shadow of a doubt. So what I simply did was I placed all of those confluences in my favor, and I took a buy above there, a buy stop right above there, about a pip above these highs. And as you can see, price didn't even think about turning back. My stops was below this wick and price hit TP within a matter of moments. Now, as I mentioned in the start of the video, I did leave a lot of money on the table with this big moves to the upside. Even later on in the week with the big moves to the downside, I left a boatload of money on the table. But what you guys need to realize is so that confidence as a trader is the best commodity, guys. Confidence as a trader is the best commodity. So this was about a 1 to 1.3. I took a 50% at 10 pips, and then I let the rest run. Now in hindsight, I do want to work on catching these big moves all the way to the upside, because this was about a 1 to 4. If I do place the rest 3 hold to, it was about 880. My stops was below that, the entry candle, and if I just carried it all the way up to there, when I saw the first bearish candle,
no, God, please, no,
I don't know, 1 to 4, okay, 4.5, and that's my first trade, guys. So it's placing all of the confluences in your direction to catch directional buys, and then just waiting for lower time frame key levels to break in your direction. Or if you're seeing clean traffic to the left hand side, what you can then do is just anticipate that price is gonna continue moving to the upside. And that's the first trade of the week, guys. This is the second trade, guys. This is the second trade. So as you guys can see, this was Wednesday around about the same time, pre-London, 8:38, and I was anticipating buys. Why was I anticipating buys when there was a full big ass push to the downside on this 30-minute time frame? Let me show you guys. So as you can see, I denoted this area already here. When we're coming down to the when I came to the charts, I looked at the 4H. Where is this? I looked at the 4H and I saw these big bearish candles, right? And I was anticipating price could potentially come back up to retest these highs. Why is that? Because we're in an uptrend. Okay, now the candles are pushing bearish, and that's something that I should have taken note of. But when you come down to the lower time frames, like the hour and the 30-minute, what you can then see is price created this area right here. So we created a key level at the bottom and we created a key level at the top. And if you drop down to the 30-minute, what you can see is that we had a clear break of these areas and we closed above. And the reason why I wasn't taking this on the 15-minute was because we had CPI news on this day. And what I've learned from this trade, as you guys can see, it is a loser. What I learned from this trade is that I need to start learning more about fundamentals. I need to start taking it more into account. But what I also want you guys to note is this formation right here. I want you guys to note it because a lot of people think you can't learn from your losers. A lot of people think you shouldn't journal all of your trades, but this is the reason why you should journal all of your trades, guys. This is the reason why you should take every single trade that you take and put it somewhere so that you can learn from it. Okay, so we took the buy in and around these areas here when price broke the highs. So what had happened was that price came down, created the wick, price flipped up, and that's when I took the buys, right? The one thing that I should have done better on this trade was managed it, right, guys? The only way that I saw possible or fit that I could manage this trade was quite simply when price took out the high and then flipped bearish again. I should have closed half in and around the flip when price went bearish, guys. However, unfortunately, I did not do that, and in hindsight I can learn that from this trade, because the breakout and close trade is the only trade that I should be managing, and I took a full 1% loss on this, which in hindsight should have never happened if I just listened to my plan or read my plan while I was in the trade, because that is my trade management rules on this trade. However, that shit happened. What I do want you guys to know is that I missed this big move to the downside on Wednesday. So what you guys can see is this little formation right here. We broke out and then we ended up faking out, right? I want you guys to note that I missed this whole big move. This whole move of, let's take it from these lows. Let's just take it from these lows for the sake of this whole 80 pip move. I missed the whole thing. I missed the whole thing after the loss. Missed the whole thing, and I had a second trade because I give myself 2 trades a day. Missed the whole thing, and it is what it is. But the important thing is to learn from these losses, guys. And what I've learned was that I need to manage my trade a bit more aggressively when these type of things happen, so then you can just add your half back when price breaks these highs again to continue, or if price goes out to take you out, you're gonna lose less than what you actually risked. But this formation is key because it happened multiple times. So that's what we learned from the loss management, and also a fake out formation. So jumping into the next trade, guys, I think this is the third trade if I'm correct. I'm not going to jump into the actual charts because I am going to mention that this trade went out of my plan, in a sense that the time that I took it was out of my plan, okay? So the time that I actually took it was at 8 in the evening, and I'm supposed to only trade London. So this was a trade that was completely out of my plan. You will see I even closed it early. I closed the whole thing early, and the reason for that was because I knew that if it went against me, I would feel like complete trash. And it's just important to stay disciplined in this game. Discipline is the only thing that's going to keep you going in this game. So yeah, I make profit, but I did have to write a whole 500 to 1,000 word document as to why I broke my plan. So yeah, guys, that's this one. So let's get into it. It's simple. We have this key level right here, and we have an area in the market where if you look to the left hand side on the 15 minutes, so this is the 5 minute, it looks a bit messy, but if you look to the left hand side on the 15 minute, you can see we have clean candles to the left hand side, guys. And the importance of that is just that when price gets into this area, it's going to be easier for price to move to the upside, right? It's going to be so much easier for price to reach these areas here because of having less resistance to the upside. And I'm not talking about resistance in terms of something like that. I'm just talking about when price gets to a certain place, it's going to have less resistance to do this type of thing because there's nothing to stop it from. There's no traffic lights essentially. So once price broke above this, I took my buys. I actually had my buy stop above that, about a pip above that, and I'm just anticipating price to continue to the upside. But once I got back to my clear thought process and I told myself, look, you shouldn't even be in this trade. Look at the time that you trade in. It's, yes, the trading setup is your trading setup, but look at the time. Discipline is more important than profit. Discipline is more important than profit in this game, guys. Remember that, because discipline is going to keep you around for a long time. When you step outside of your plan, you're going to give your mind this, you're going to get a chemical release to tell yourself that this thing works outside of your plan. But there's a reason why you have that times to trade. There's a reason why you're trading in those times. So remember that discipline is more important than profit, guys. Discipline is more important than profit. So let's go on to the next trade. Final trade. So remember, guys, I told you to take note of the pattern. In the second losing trade, or the second trade, the losing trade that I showed you, I told you guys to take note of the pattern, okay? not necessarily a pattern, but just the candlestick play out. So let's get into this trade. This trade was about on the 23rd of June, 9:14. Okay. So what you guys can see coming into the charts here, I looked at the daily first of all. When I came to the charts, I saw that this daily candle was bearish, and it was bearish off from a key level, right? It was bearish off from this key area here. So what I knew is that the next daily candle had potential to push bearish, and me being able to potentially capitalize on that. What I also saw when I came to the charts at London or pre-London was that this daily candle had already taken out the low, added confluence. That's all that you're trying to do. You're trying to add confluence to your trade. So coming to the charts, I'm looking at this key level being broken in Asia, and what you can see is that Asia was a strong candle, strong bearish candle, very, very strong. So what I'm doing is coming into London, I knew that there's a high potential. You put the fact that the previous daily was bearish. This daily currently took out the previous daily low. You have a strong bearish candle coming out of Asia. So what are the chances of price actually pushing down in this session? The chances are way higher that it's going to go down than it is going to go up. Okay, so we're dropping down into the time frames. What do you see? You see a potential key level being created here. And because I'm a breakout trader, I know that there's potential that I could potentially enter below here. However, we're dropping down and we're going to refine this zone and see if there's any other zones that we need to take into account. Okay, so what I can note is that this right here is a key level for price to potentially be a fake out zone. Okay, for price to potentially fake out. And why is the fake out zone? Because we're looking for price to continue to the downside. Any area where price potentially creates a lower high, potentially, what do I mean by that? So price created this lower high, we then formed a lower low, and now we're pulling back. We created this potential lower high, but we failed to make a new low, right? So we failed to make that potential lower high or lower low. So this is a potential lower high. Thus it becomes a fake out zone to me, right? So I know based on structure that anything below this area right here, anything below the previous lower high is a sell. So price, you can sell off from there, you can sell off from there, you can sell off from there, or you can sell off from the potential double top area, right? So what I did was, I know that based off from previous history or previous data that I have, the 4H candle has a high chance to pull back to the 50% level of the previous 4H candle and then continue to the downside. And you add that with the confluence of price action potentially faking out. So we have this push to the upside. A lot of people got into these buys, breakout buys, to potentially take it to the upside, right? My whole thought process was, let's refine this area, because I know I use this area right here, and you guys can see I use that area on the 15-minute. So I knew that once this had happened and this bearish candle had formed, I knew there's a high chance for price to continue to the downside. And now what do you guys see? What do you see? You see this little formation right here. And that's what I'm going to call my fake out formation. That's what I'm going to call it, because I just discovered it this week, guys. I just discovered it this week, how to actually trade fake outs. And that's based off from going through all of my breakout trades that I got faked out on. And what happened was price obviously pushed up. And you guys can see that I have this level now being my break above or buy above area, where if price broke and closed above here, I would have bought. And that's because now new structures forming to the upside, right? But price failed to break above and we broke back into this range. And if you do break back into this range, there's a very high possibility that price can go and retest these lows. So what I did was I took a break below these candles here. I had my sell stop. I had my stop loss at about 20 pips above the previous high. And you can see that price first went up and then price came down, and my TP was about there. Now in hindsight, I should have let something run, because fucking hell, bro. This thing ran and it never stopped running.
What the fuck happened? What happened?
I feel like this was like one of those it's like my boy Cop. He was running a young marathon. That's the way this candles moved. Damn, bro, this thing fell about 124 pips after I entered. But guess what, like, as I mentioned, guys, it's all about just taking one profitable trade a day. If you can get money out of the market, you beat the market on that day. And that's the thought process that you need to have. Now, I am working on maximizing this, as I mentioned in the start of the video. I'm trying to maximize the profits that I'm getting out of the market, but I'm not also being greedy. I know that once I get something out of the market, I am good. And guys, that's the important process of looking at your losers, looking at your winners too, to see what's the commonalities, looking at all of those things, because your data is the most important point as a trader. So that's my trades for the week, guys. I hope that you guys enjoyed this video. I feel like all of these trades that I won were big runners, and it felt like, personally to me, you know, when you're at a party and you're speaking to the flyest baby right there, you're speaking to the flyest baby, and she's feeling the chats, and you get the number, but it ends up being nothing for that night, and you just, like, you kind of settle for like a young 5 or something, where you could have gotten like a 9.5. That's what it felt like, taking profit early and then just letting it run like that. That fly 9.5 baby just gassed you up. Fucking hell, she left the party game, and she just left you behind. It's like, bro, what the hell? That's what it feels like this week. So don't forget to hit the like button, hit the subscribe button, and comment down below what you guys think of my thought process and how it actually grew. You guys can actually go take a look at my last breakdown, how I looked at the markets. I can tell you guys it's completely different. There's a big shift in how I look at the candles, how the candles has actually slowed down for me, and I'm enjoying trading so much more now. I have less anxiety when I'm trading. My trade management is way better, and I'm just enjoying the process, guys. I'm enjoying the process. So this week ended up being about a 1.16 R return. Let me show you guys my equity curve for the week. So this right here is my equity curve for the week, about a 1.16 R return. I hope you guys have a wonderful weekend. Don't forget to spend time with your family, spend time on things that you love outside of trading, and then just dedicate about a 1 hour to review your trades for the week and review your patterns that you go through as a person, your emotions, your everything that you go through when you lose, everything that you go through when you win. What do you do up to lead into a winner? What do you do up to lead into a loser? And you'll be able to notice. And then what you can also note is that how do you continue doing those things that you actually win? Journal everything, guys, and then you'll be able to become a winner in this game. Trust me, that's the way to go about it. Have a wonderful weekend, traders. Have a wonderful weekend. If you're just watching this for entertainment and education, have a wonderful weekend, guys, and come back refreshed on Monday. Peace out.